Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do two things. I teach a course on gap trading. Traders that take my course learn two gap trading strategies. The first one are the morning gap trades. This is where stocks that are gapping higher or lower at the open, resulting from either an earnings announcement or another news-related event, it creates an opportunity. Day traders need opportunity. They need volatility. We need stocks to be moving. When stocks are gapping higher or lower at the open, they're moving. We're interested. Here's the opportunity. Traders that can identify where a specific price level exists, where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction, those are the winners. That's what I teach in my course. Traders learn how to calculate and identify, figure out exactly where those price levels are. If they're hit by chance, it creates a high probability tradable opportunity. Those are the morning gap trades. If a stock comes into a level that we identify as a high probability bounce area, for example, a high probability area where a stock is going to have a price reversal, that's an area we're interested to take a trade at. Those are the morning gap trades. I teach traders. Traders learn exactly how to identify those specific price points. All about the entry price. We're going to look at two of these specifically. We had 4 positive trades today. 4 gap trades that were winners today. We're going to look at 2 morning gap trades and 2 gap fill trades. Speaking of which, gap fill trades are when stocks are gapping higher or lower at the open. They leave what's called an open gap. Open gaps at some point in the future will be filled. Stocks will come back to this price area and fill those gaps at some point in the future. That's the gap fill strategy taught within the course. Traders learn exactly which stocks this works the best with, and that applies to the morning gaps and gap fills. What are the criteria we use? What are the specific trade setups we're looking for? Which trades are good? Which trades are not? Which ones do we want to avoid? Which ones do we want to double down with? All that's covered in the course at LazyGapTrader.com. Then the other thing I do is I give traders each and every day an opportunity to get my gap trades sent to them via email at 9 o'clock in the morning, Eastern Standard Time, 30 minutes before the market even opens for trading. These are the trades I'm willing to take. These are the gap trades I've identified in the morning that are the highest probability setups for the day. Here's the email that went out this morning, and we had 5 possible morning gap trades on the board today. We had YPF, FL, WGO, KMX, and LZB. As you probably know by now, we're only interested in taking the trades that come into the specific price level that we've identified. So if that doesn't happen, it's a no trade. It's off the board. For example, YPF didn't hit its price objective, it's off the board. It's a no trade. CarMax, no trade, didn't hit its price objective. Lazy Boy, no trade. It was a near miss, but it did not hit its price objective. Therefore, we're not taking the trade. It's off the board. We did have 2 that hit their price objectives today. We are going to take a look at those. The first one was Foot Locker, and I say gap lower. Support levels are 46.01 and 41.54. Stop and profit target is about 30 to 50 cents. These are minimum profit targets. The second one that hit its price objective today was Winnebago, WGO. Gap higher, resistance levels are $31.73 and $33.51. Stop and profit target is about 20 to 40 cents. That's a minimum profit target. Now, in addition to the morning gap trade opportunities that are sent to traders each and every day at 9 o'clock, I give a laundry list of potential gap fill trade opportunities, and there's usually about 30 or so on the list. These are stocks that when they come back to the specific gap fill level should have a price reaction in the other direction. So in the interest of time, I'll review one of the 2 that hit its level today on the gap fill list, and it was RH. And you'll see here where the gap fill level was $55.43. It was a short trade at that level, and starting the day, it was almost 5% away from filling the gap, but we keep a running total just in case. We're back on the chart of Foot Locker, and let's pick apart the trade. We're on the 10-minute chart, and you can see here there's a couple of things I want to point out. First is the importance of the 46.01 level. So you can see where the stock closed yesterday, up here over $50 a share. The stock was gapping lower at the opening today at $47 even and traded lower. But you can see once the stock pierced through 46, it found support, reversed trend, and now is trading higher. But that's not where the trade is. The trade actually went below the stop loss limitation looking at the 10-minute chart. However, these are one of two trades. They're either day trades or they're just scalp trades. This one turned in to be a scalp trade. So let's go down to a 1-minute chart and I'll show you the trade. So on the 1-minute chart, you can see in the first minute of the day, the stock came clearly right into the 46.01 level, and by the second minute of the day, it was already at a high of 46.70 for a 69-cent maximum gain inside of a minute of trading. Now on this go around, the stock stayed within its stop loss limitation. When I go back to the 10-minute chart, however, you can see that the stock did go a little bit lower, and this was after our trade was done. But the reason I point this out is, in my course, traders learn how to take advantage of trades that have the ability to run the rest of the day. So for example, we may take a scalp trading profit on a trade, and then we may hold a portion of the position for a larger move throughout the trading day. And I teach traders in my course how to turn trades like that into risk-free, emotionless opportunities, walking away with profit in their pocket and letting the rest run to see how much profit they can make for the remainder of the day. And as you can see, just by 10:10 in the morning, Foot Locker was at a high of $48.18. That's $2 more than the entry price. The point here is the importance of the price levels that traders learn how to calculate in the course at LazyGapTrader.com. This is something that you can utilize not only for gap trading, but across other forms of day trading. I teach you how to identify very important and specific price levels on each of these charts. It's valuable information. Look at this. Just for a variety, we go over to a 5-minute chart on Restoration Hardware, RH. This was right off the morning gap fill list. We traded up into the 55.43. We pierced through it by a little bit, making a high of 55.77 within the stop loss limitation. And guess what? Just minutes later, the stock was at a low of 54.31 for over a dollar gain by 10 o'clock in the morning. Folks, this is a license to learn a strategy that you can use each and every day for the rest of your trading career. The information contained in the course at LazyGapTrader.com is not just limited to morning gap trades and gap fill trades. You'll find that the information learned in the course is information that each and every day trader can benefit from and use to their advantage. You can learn everything you need to know in the course in order to trade the gaps successfully. I'm David Frost, LazyGapTrader.com. Come check out the course, folks. Thanks for tuning in.